Hello, YouTube. So let's take a look at this chart. Here I am on the 5 minute. So one thing that's important is when you're looking at a chart, and if you do use volume, notice the volume that I have displayed on the bottom is quite a bit different from what TradingView normally has. So if we type in volume, we get what we may have used this in the past, but so anyways, a couple things about this is that see how the bars are relatively fat, like on the normal indicator, and it's hard to distinguish, like, okay, is volume higher or lower, right? Because it's just like basically a histogram. Now, if volume is essentially the tracks that are left by the banks and institutions, they don't want you to see that, right? So why wouldn't they want to hide it, right? So they make the volume bars bigger, and a lot of these trading platforms are designed this way. If you go on MetaTrader 4, another thing you'll notice is that the color, right? So see, this here is a bearish bar, but my volume bar is apparently bearish as well, right? Now that's not necessarily true, but why is the color changing? Now that doesn't really mean much, right? So okay, is it bullish or is it bearish? Well, you would have to look at the actual order flow at that time to determine that, right? But see, if we ditch the volume indicator that comes stock, now we get a lot more information. Now there's space between each bar, okay, but we get a lot more context information, right? So basically, if you look in the last like 10 or 20 bars, right? So this bar here, okay, so what's different about this bar? Well, it's relatively heavy volume, right? Because looking at the last 15 bars, okay, we have relatively light volume, right? So we can start to analyze, like, if we see this bar, look at the spread, okay, so we can look at the market quite a bit differently now, right? Because we can distinguish the differences. Not saying that you have to trade with volume spread analysis, but it's much easier to, right? So, and you can see the colors are different, right? So I'm using, it's called Hidden Gap, and there's a guy on one of the forums online, and his name is Hidden Gap. So this is where this essentially comes from, right? So you can, like, look at the code. So you can get this basically the same indicator for MetaTrader 4 if you really want to. So basically there's a moving average here, and that's essentially to give you a little bit of context, right? So that's like, okay, in this area, why is this bar so low? But like in the past, the volume, the average of the volume basically is like that. You can probably change the setting if you want to, but like it's set to 20 for the moving average. So just by doing this alone, it's going to give you a little bit more of an edge when you just start to distinguish volume. And if you do trade with volume spread analysis, it'll really help. And in fact, if you look at a company called Trade Guiders, that's essentially what they do. But they have a color in the background, and they have other price action based indicators. Not that I trade that way, but it does give you a bit more insight to the market. So also, if you look at MetaTrader 4, you'll start to notice how on the mobile version it'll say tick volume, right? So and like tick volume is quite a basic concept, and it unfortunately it's core to the forex markets. Now, if you're familiar with the futures with the centralized exchange, you have quite an edge over everybody else, right? And that's not actually apparent because as a forex trader, there's like another layer of retail that you're behind and you don't necessarily see it, and it's put on by your broker and they play on that, right? So until you see like the other side of trading with like futures that includes like order flow, basically it's it's hard to actually understand why a lot of technical analysis is actually incorrect and deceptive. But just if you view volume as more like the tracks of the market, you can get quite an insight. But you can't just trade just based off volume. Obviously, like take for example, okay, this is British pound, Japanese yen, right? So if you were a trader and you were buying or selling a derivative, some derivatives do require that you actually hold some of the security, right? So that means, okay, if somebody for some reason were to acquire a derivative, they have to acquire some of the security that backs it, right? So at some times you're going to see a lot of volume and there's no follow through, right? Because the player is all he has to do is just fulfill the requirements. So he has no interest in the actual like speculative interest, right? So you're going to see some big moves in the market that don't make sense, right? And it's just because there's many different players in these markets now that we have electronic trading. And as a retail trader, because by definition, if I'm an institution, I'm trading a lot of money, I have a big account, right? But a retail trader is far from that, right? So a retail trader is just like basically me and you. We have relatively small accounts. Now, like, what is a small account? Well, is $2 million a small account? One, yes, right? Because you got to understand how much money flows in these markets every day, right? So it's quite a shift because nobody's like the broker is not out there to help you, right? And there's not too many people actually teaching some of these concepts. Now, what I'm showing you now is quite basic, and even if you look at my market profile videos, there's quite a bit more to it.